Hello everyone, this is Dr.Mihir Shah once again with another video. In this video, we are going to be solving November 2024 university question paper under the subject direct taxation. Again, a very important video for all the TYBMS SEM 5 student. So in this video, we are basically going to take up all the practical problem sum that had appeared in this particular question paper and then try to solve them in the most simplest and the easiest method. Okay. So chalo, let us start one by one. What are the various questions that were asked in this paper? First, Mr. Jack was born in UK in the year 1991. He came to India for the first time on April 1st, 2019 and started the business in India. He went back to UK on 10th August 23. He again came back to India in 14th November 23 and returned to his country UK on 28th Jan 2024. Determine his residential status for the assessment year 24-25. So now the very first statement, Mr. Jack will be a resident of India if he fulfills the following condition. First, he is in India for 182 days or more in the previous year, or he is in 2A and B together you'll have to fulfill. He is in India for 365 days or more in past 4 years immediately preceding the previous year, and he is in India for 60 days or more in the previous year. So among these two, any one rule he has to fulfill. Computation mein, remember for 23-24 we have to find. He was there in India, he went to UK on 10th August. Okay, then he came back to India on 14th November and then again we went back to UK on 28th Jan. So again, the computation. April he was there completely in India. Okay, May in India, June in India, July again India, August 10th. Okay, it's given August 10th he left to UK. So left 10. So 10 days he was in India. September, October he was not there. He came back on 14th November. So 14 to the 30th November. So that's 17 days. December 31. Jan 28 he again left. So Feb and March he was not in India. So we added up, we got 208 days. So conclusion may we'll write Mr. Jack was in India for 208 days in the previous year. Rule says he has to be there in India for more than 182 days or more to be a resident. So since it's 208 days, he is a resident of India. If he is a resident, now we have to find the rule, or we'll have to satisfy whether he is an ordinary resident or not. So again the condition, computation of ordinary status. So he has to be in India for 730 days out of the past 7 years immediately preceding the previous year, or he is in India for 2 out of 10 years immediately preceding the previous year. So now 4 years past 7 years ka data we note down, but for 7 years, remember he came first time to India on 1st April 2019. So prior to that he never came to India. So we have written here 18, 19, 19, 20, 20, 21, 21, 22, 22, 23. From 1st April 2019 till 2023 he was in India itself. So all the 4 years, 365 days he was in India. Added up, we got 1460, which is way more than 730 days. So finally, Mr. Jack was in India for more than 730 days in the past 7 years. Therefore, he is a resident and an ordinary resident. This is how you all had to solve this first sum based on determine his residential status. So you all can go through it once. I hope everyone have understood this. Okay, now let us see the next sum which was there in option with this question. From the following information of Mr. Vijay for the previous year 23-24, compute his gross total income for the assessment year 24-25 if he is a resident, an ordinary resident but not an ordinary resident, a non-resident. So remember those 5 rules which we had discussed earlier also in some earlier videos. If anything has been received in India, income received in India, everyone will pay. If it is control, manage or set up in India, the first 2 people pay. Foreign income, the first person has to pay. If it's an agriculture income, no one pays, and past profit, no one pays. These are the five rules that you need to consider for solving this sum very simple, in the simplest manner. Okay, so chalo. First thing was income from business in Dubai, control from London. Dubai, London, both are foreign, so only the first person will be eligible. Rent from house in UK, receive in Spain, both are foreign, so again 60,000 only in the first column. Salary earned in New Zealand in the past. The moment past comes, no one pays tax. Dividend from German company received in London. Again, both are foreign, so first company, the first person will pay. Income from agriculture in Japan received in India. If it is received in India, everyone pays. Royalty from a company in Singapore received in Melbourne. Again, both are foreign. Only the first person will need to pay. Interest credit to HSBC Bank New York branch. Both are foreign branches, so only the first person will pay. And lastly, interest on UK development bond received in India. If it is received in India, everyone pays. So that's as simple as the sum can be. We total it up. So the first ROR में the column, the total came to 6,90,000. In RNOR 2,90,000, and again NR 2,90,000. So this is how you all had to solve question number 2, which was based on finding the gross total income based on ROR, RNOR, and NR. So you all can go through it once. Okay, chalo, now let us see the next. So this was question number 2, completely done. Now let's start with question number 3. Mr. Ranade is a physically disabled person with 90% disability. So I will first mark down 90% disability. So this comes basically under ATU. He is employed with Ganesh Printers. He gives you the following information: basic salary, bonus, entertainment, house rent allowance, conveyance allowance, perquisite, professional tax deducted. So these are all data which are related to salary. Other information may interest received on government security, dividend from mutual fund, interest on saving bank, gift from friends. So these are all the data which is based on income from other source. So let us see how you go about with this. So now this is based on total income, salary, other source, and deductions. So you'll start with the salary part. Now first salary is given, everything is given per annum, 6 lakhs per annum. This is 2,50,000 per annum. Bonus, entertainment is 48,000 per annum. House rent is 1,20,000 per annum, less exempt, so we'll minus that. 24,000 per annum minus 21,600 exempt value, that is. Okay, and 24,000 per annum is perquisite. All these are taxable stuff, so we have to just note it down. So basic salary 6 lakhs, bonus 2,50,000. Entertainment allowance was 48. House rent allowance was 1,20,000 minus 7,900, so which comes to 1,02,100. Conveyance allowance was 24,000 minus 21,600, so comes to 2,400. Perquisites was 24,000. You add up, you got the value as 10,26,500. That is like a gross salary. Less deduction, 2 deduction. One is standard deduction of 50,000 and second is professional tax 2,500, 52,500. You minus, you got 9,74,000. This is Roman number 1, income from salary. Second is income from other source. Let us see what all can come. Interest on security, yes. Dividend, yes. Saving, yes. Gift from friend is only 50. Rule is gift from friend has to be more than 50,000, then it is taxable, otherwise not. So only 3 we have. So interest on government security 18. Dividend from HDFC Bank, HDFC fund, mutual fund, that is 5,000, and interest on saving account is 12,000. Total comes to 35,000. We added to our income from salary, so we get 10,09,000. That's our gross taxable income. Less deduction under chapter 6. We have one is ATU, 90% disabled, so 1,25,000, and saving account 10,000. So ATU physically disabled 1,25,000, TTA saving account 10,000, total 1,35,000 gets deducted. So 10,09,000 minus 1,35,000, we get the value as 8,74,000. That's our net taxable income. This is how you all have to find the sum or solve the sum based on net taxable income of Mr. Ranade. You all can go through it once. Very simple. 3 parts: income from salary, other source, and deduction. Okay, chalo. Now let us see what are the next question in option. Mr. Lakhil is a physically disabled person with 70% disability. He is employed with Ganesh Printers. We have basic salary, DNS allowance, entertainment allowance, house rent, conveyance, perquisite tax. Similar to the previous question. Other information में winning from lottery, interest received from saving bank, and interest accrued on Kisan Vikas Patra was given. Again, similar to the previous question. So we have salary, other source, and deduction. So computation में first basics, another these are everything per month. Remember, these all the question whatever they are giving you is per month, so we'll have to multiply it by 12. So basic salary 50,000 a month, so that comes to 6 lakhs. DNS allowance 20,000 a month, 2 lakh 40. Entertainment 62,500, which comes to it's per annum. Now from here everything is per annum, so we take it directly 62,500. House rent 60,000 minus exempt 12, so 48,000. Perquisite conveyance was 48,000 minus 46, so 2,000. 28,000 is perquisite. We add up, we got 9,80,500 as a gross income from salary. Less deduction. We have two: standard deduction 50,000 and professional tax 2,500. 52,500 we minus it, we get it as 9,28,000. Other source now. So here with this our net taxable salary is done. Other source में winning, interest and accrued interest, all three will appear. So interest winning from lottery 30, interest received 25, interest accrued 5. So 30 plus 30 is 60,000. We add up 9,28,000 plus 60,000 is 9,88,000. That's our gross taxable income. Less deduction में 2 deduction. One is 70% disability 80U, so you'll get 75,000 ka deduction. And interest on saving bank we have TTA, which is 10,000 ka deduction. So 10,000 TTA and 80U made 75,000, total 85,000 ka deduction. We minus, we get 9,03,000 as a net taxable income of Mr. Akhil. So this is how you all have to solve the sum based on income from salary, other source and deduction. Chalo, you all can go through it once. Very simply solved, okay? Okay, so these are the two questions which are there under question number 3. Let us now go ahead with question number 4. Mr. Samar acquired a residential house property in the year 2023. Okay, now in this there is an error in the question. This is supposed to be 2003. So he purchased a house, acquired a house in 2003 for 10 lakhs and made some improvement by way of additional construction, incurring an expenditure of 2 lakhs in October. It's not 24, it's 2004. He sold the house in October 23 for 80 lakhs and paid brokerage of 50,000, and he acquired a new house in 24 for 25 lakhs. So those two corrections are there, 2003 and 2004. Okay, 2010-11 has nothing to do with this sum. So now if I have to solve this sum, we always start with sale less brokerage or transfer. So sale amount was 80 lakhs, brokerage was 50,000. So sales, net sale or sale consideration minus brokerage, 79,50,000 is our net sale. After that we have less index cost of acquisition, that is cost of acquisition which was acquired for 10 lakhs into previous year ka CI, that is 348 upon 2003 ka 105. So we multiply, we divide, we got 331428 334286. So it is 33,14,286. Same way we have less index cost of improvement, that is cost of improvement 2 lakhs upon into 348 upon 113. we got 615929. We added up, we got the value as 39,30,215 negative. So sale less index cost of improvement and acquisition, we get a long term gain as 40 lakhs 19,785. From that, less any investment or purchase under sections 54, that is, so I can see a residential house has been purchased for 25 lakhs. So less purchase of new residential house under section 54, that is 25 lakh, we subtract, we get a final long term capital gain as 15 lakh 19,785. This is how you all had to solve the sum based on long term capital gain. Okay, you all can go through it once. Okay, so now this was question number 4. The last question which was against this was, Mr. Raman, who is 80% physically disabled, provides the following information for the previous year ended 31st March 2024, and you are required to compute his net taxable income for the assessment year 24-25. Profit and loss account has been given. So this is business and profession, other source deduction related sum. In order to solve, first we mark the adjustment. First, depreciation, so I'm marking depreciation. Advertisement, second, so I mark advertisement. Third is salary, so I'm marking salary. Medical, that will come in 80D. 1/4 for personal, so I'm marking the personal part. Now, in order to solve income from business and profession, the sum will always start with net profit. So net income from business profit, so we are starting with net profit at 8,66,000. After that, we have less deductions or less expenses which are disallowed, meaning expenses which are not a part of business will all get disallowed. So let us see one by one. First is office rent. Now office rent is a normal business expense, so cannot come. Salary, again normal business expense should not come, but then there's an adjustment. Salary of 40,000 which was withdrawn by Raman for personal use. Anything which is used for personal not allowed, so will be considered. Amount is 20,000, so salary of 20,000 for personal use. Sorry, salary of 40,000 for personal use, so that's here. Advertisement cannot come, but there's an adjustment. 20,000 is for political party souvenir, cannot appear, so that has been considered as disallowed. Motor expense considered as business, but then there's an adjustment. 1/6 is for personal. 1,20,000 divided by 6, so that comes to 20,000. Personal is drawing, so disallowed. Income tax personal disallowed, so will be considered. Printing and stationery normal cannot come. Conveyance normal cannot come. Depreciation usually cannot come, but if there are two depreciation, the top depreciation will come here, so that's 70,000. Donation personal will come here. So when you add up, we got a 2,52,000 added with 8,66,000, we get 11,18,000. These were all add expenses which are disallowed, not less income which are disallowed. GP is a allowed income. After that, interest on bond, interest on foreign company, both are disallowed. We have considered and the depreciation ka second effect. So 11,18,000 minus 2,06,000, we get 9,12,000. That is income from business and profession. Now income from other source, only those two incomes I can see, bonds and foreign. So bonds and foreign 1,30,000, we add up, we got it as 10,42,000. Lastly, deduction mein we have 80% physically disabled, okay, one, and secondly he paid mediclaim of 20,000, so 80D. So I have 80U physically, that is 75, because direct 80%, if it's above 80 then it's 1,25,000. 80D ka 20,000, total 95,000 deduction under chapter 6A. So 10,42,000 minus 95,000, we get it as 9,47,000. That's a net taxable income of Mr. Raman. So this is how you all had to solve this last sum which was there in this particular question paper. Okay, chalo, I hope everyone have understood it. Chalo, with that we will be ending this video here. Thank you.